Hello everyone, welcome to the market opening bell for Friday, March 28th. Hong Kong stocks rose intermittently on Thursday. The Hang Seng Index opened 60 points higher, but dipped 110 points in the early session to a low of 23,372. It later rebounded, reaching a high of 23,866 with a gain of 383 points at one point. The index closed the day up 96 points or 0.4% at 23,579. The Hang Seng China Enterprises Index rose 24 points or 0.3% to 8,678, while the Hang Seng Tech Index increased 16 points or 0.3% to 5,589. The total market turnover for the day was 239.6 billion Hong Kong dollars. Mainland Chinese markets also closed higher, with the Shanghai Composite Index up 5 points or 0.15% at 3,373, and the Shenzhen Component Index up 25 points or 0.2% at 10,668. The combined turnover of the Shanghai and Shenzhen markets reached 1.1906 trillion yuan, an increase of 36.4 billion yuan from the previous day. The renminbi midpoint rate was set at 7.1763 against the US dollar, down 9 pips from the previous day's rate. In the Hong Kong market, following Xiaomi share placement fundraising, NIO announced plans to issue up to 119 million Class A ordinary shares at 29.46 Hong Kong dollars per share through offshore transactions targeting non-US persons outside the United States, raising 3.5 billion Hong Kong dollars. The funds will be used for research and development of smart electric vehicle technology and new products, further strengthening its balance sheet and general corporate purposes. The placement price represents a 9.5% discount to yesterday's closing price of 32.55 Hong Kong dollars. The latest data from the National Bureau of Statistics shows that the effects of the two new policies continue to manifest. From January to February, policies promoting large-scale equipment upgrades and trade-ins of consumer goods showed sustained effectiveness, notably driven by subsidies for vehicle replacement. The profit of the automobile manufacturing industry grew by 11.7% year-on-year. Earnings highlights: SMIC reported record high revenue of 8.03 billion US dollars for 2024, up 27% year-on-year. Gross margin was 18%, down 1.3 percentage points from the previous year, with a capacity utilization rate of 85.6%. Net profit was 493 million US dollar, down 45.4% year-on-year. With earnings per share of 6 cents at 6 cents, no dividend was declared. Looking ahead, the company noted that based on extensive discussions with industry chain partners in early 2025, the market generally expects that, apart from continued rapid growth in artificial intelligence, demand across various application sectors in 2025 will remain flat or grow moderately. External uncertainties may impact the second half of 2025, while competition within the industry intensifies. SMIC reported a net production of 730 million barrels of equivalent (BOE) in 2024, up 7.2%. Revenue reached 420.5 billion yuan, a 0.9% increase year-on-year, driven by higher oil and gas sales volumes and a decline in international oil prices. The full-year average cost per barrel was 28.52 US dollars per BOE, up 1.1% year-on-year. Net profit attributable to shareholders was 137.9 billion yuan, up 11.4% year-on-year, with earnings per share at 2.9 yuan. A final dividend of 0.66 Hong Kong dollars was maintained. The company made 11 new oil and gas discoveries throughout the year and completed the construction of the trillion cubic meter gas field in the South China Sea. Proven reserves hit a historic high, reaching 7.27 billion BOE by the end of 2024. Last year's reserve replacement ratio was 167%, with a reserve life maintained at 10 years. SMIC stated that its full-year capital expenditure for 2025 is projected at 125 billion to 135 billion yuan, with a production target of 760 million to 780 million BOE and a reserve replacement ratio target of no less than 130%. From 2025 to 2027, the annual dividend payout ratio will be no less than 45%. Companies announcing results today include Industrial and Commercial Bank of China, China Construction Bank, Agricultural Bank of China, PetroChina, CSPC Pharmaceutical Group, Great Wall Motor, Qingdao Brewery, and Media Group. US President Trump announced the imposition of additional tariffs on automobiles, causing the Dow Jones Industrial Average to drop as much as 312 points in early trading on Thursday. It later stabilized briefly but saw losses widen by midday, closing down 155 points or 0.4% at 42,299. The Nasdaq closed at 17,804, down 94 points or 0.5%, while the S&P 500 ended at 5,693, down 18 points or 0.3%. The Nasdaq Golden Dragon China Index, which tracks Chinese stocks, rose 1.4% by the close. Among them, Alibaba gained 2.6%, while NIO fell 5.7%. The Hang Seng Index night futures closed at 23,776, up 158 points, trading at a 197-point premium over the Hang Seng Index cash close. Shares of automakers with supply chains across North America declined. General Motors dropped 7.4% and Ford Motor fell 3.9%. Tesla surged as much as nearly 7% during the session, but closed only slightly up by 0.39% at $273.13. Tech stocks showed mixed performance. Nvidia fell 2.05%, while Meta and Alphabet each declined over 1%. Apple, however, rose 1.05%. Uncertainties surrounding US tariff policies drove investors toward safe haven assets, pushing spot gold prices to a new record high of $3,059.58 per ounce. On the economic data front, the US economy grew at an annualized rate of 2.4% in the fourth quarter of 2024, slightly above the previously estimated 2.3%, primarily reflecting a downward revision to imports. Exports declined by a modest 0.2%, while imports fell by 1.9%, exceeding initial expectations. According to the U.S. Department of Labor, initial jobless claims for the week ending March 22nd, adjusted for seasonal factors, decreased by 1,000 to 224,000, slightly below the market's expectation of 225,000, remaining at historically low levels. Our stock pick today is AK Medical, stock code 1789. AK Medical is primarily engaged in the design, development, production, and marketing of orthopedic implants and related products. On May 21st of this year, the National Healthcare Security Administration announced the results of a second round of centralized procurement for artificial joints upon expiration of the purchasing agreement. This marks the second round of renewed procurement of artificial joints for a term of 3 years, covering 6,281 hospitals and a total demand of 581,600 sets. Compared to the first round of centralized procurement, the total demand has increased by approximately 8%. According to this round of renewal results, the group's contracted procurement volume continues to rank among the top tier of all brands, with an increase of about 10% compared to the first round. Leveraging the rapid implementation of centralized procurement, the group has effectively expanded its presence in national and provincial hospitals, achieving over 90% coverage of top-tier hospitals. Given that complex revision surgeries are primarily concentrated in top-tier hospitals, the group's significantly improved coverage in these institutions has led to a gradual recovery in growth for its revision products, which is expected to support the group's sustained growth in the future. The group began investing in 3D printing technology in 2009 and launched the first domestic physician-technician interaction platform in 2014, the ICOS Digital Orthopedics Customized Products and Services Platform. Through patient imaging data and doctor interaction, the platform provides one-stop services such as pre-operative planning, printing of lesion area models, surgical simulation, customization of surgical guides, and personalized prosthesis design and manufacturing. This enhances pre-operative preparation accuracy and reduces surgical risks. The ICOS ecosystem has already begun deployment in select key hospitals. For the fiscal year ending December 31st, 2024, the group achieved sales revenue of 1.346 billion yuan, a 23.1% increase from the same period in 2023, and a net profit of 273 million yuan, up 50.4%. Meanwhile, the group's overseas business also saw significant growth. In 2024, overseas product revenue reached 274 million yuan, a year-on-year increase of 20.8%. The overseas strategy is a key component of the group's growth plan. The group has clearly defined the positioning of its JRI and AK brands, achieving complementarity in branding, product lines, and sales across different markets. It has established a three-tiered management structure encompassing overseas sales, overseas business operations, and overseas marketing. In 2024, the group added product registrations in 5 new countries, with registration processes underway in 10 additional countries and 12 new distributors onboarded. Beyond conventional products, the overseas business saw the first sale of the VTS Visualized Intelligent Navigation System. The comprehensive digital orthopedics solution is expected to become a strong pillar for the group's overseas business expansion. Looking ahead, in addition to continued development in new materials, the orthopedic sector is moving toward personalization, minimally invasive techniques, and intelligent solutions to reduce patient surgical discomfort and shorten recovery periods. With over 15 years of exploration and investment in 3D printing technology, the group has built a significant competitive advantage in customization and personalization, particularly establishing a strong market barrier in top-tier hospitals. Recommended buy price is 5.8 Hong Kong dollars and with an initial target of $6.4, followed by $7 and a stop loss at $5.5. I personally do not hold the aforementioned stock.